Following last week's interest rate hike, Fed Chair Jay Powell said central bank staffers are no longer forecasting a U.S. recession. Our next guest says while things are developing as they should for a soft landing, it's still too soon to declare victory. Joining us now, Louise Sheiner, a senior fellow and the policy director of the Hutchins Center on Fiscal and Monetary Policy at the Brookings Institution. Louise, good morning. It's good to have you here. What keeps you from joining the chorus on Wall Street that now expects that we can still have slow but still positive economic growth and the Fed no longer tightening pretty soon and therefore an indefinite soft landing?
Thank you so much for having me. Yeah, I think I worry about a few things. I'm not worried, but I'm not ready to declare victory, as you said. So for one, the data have been coming in as we would hope if we're going to get a soft landing. The unemployment rate hasn't budged. Other measures of labor market tightness like vacancies and the quit rate have come down. Consumer spending is resilient and prices have been coming down. But the June was a great month of data, but that was 1 month. So one thing we want to know is that prices move around a lot. It's really unclear exactly what is happening to prices. So we're going to be looking for a sustained slowing in prices over time before we can declare victory. And then I think more importantly is it's possible that what's going to happen is the economy is going to slow somewhat and inflation will come down, but it's going to come down and kind of get stuck at a level higher than the Fed's target. Right. So it's possible. We don't know for sure that this soft landing is kind of landing to the Fed's target, or whether or not we're going to end up after this episode with an inflation that's more like 2.5 or 3. And then the Fed might have to do more and actually bring the economy into a recession in order to get that inflation down. So that's the kind of thing that we're watching. I think it's way too early to know how this is all going to unfold over time. But it's certainly looking good and looking a lot better than many had expected.
There's no doubt about that. And of course, there are many who will say, you know what, even if there's a recession out on the horizon, it often looks like it could be a soft landing before you actually get into the recession. It's not unique to have that sense that perhaps we have a little bit of a tentative all clear. I guess the question is, and you mentioned this, that, if inflation proves sticky, the market seems to be embracing this idea that the Fed is not targeting any specific level of job loss or unemployment rate, or kind of sticking to a particular equation on the relationship between jobs and inflation. They just want to see the inflation numbers go down. And if it happens and unemployment remains very low, that's all to the good. But you don't think that there's a great chance that we're going to see continued improvement toward the Fed's 2% target without a lot of pain?
I think there is a good chance. I'm not a pessimist at all. I think there is a good chance. I just think this economy is so different from what anybody had expected, from what anybody understands. There's so many variables that could change. We don't know what's going to happen within the labor market participation. We've seen head fakes before on inflation. So I just think there's a lot of uncertainty. But I think that's exactly right. And one of the things that's really uncertain is what that natural rate of unemployment is that you sometimes hear being targeted. I think some people thought it went up during the pandemic because vacancies went up so much and then unemployment rate didn't, as low as where it was before, but vacancies are higher. So the labor market is quite different. And other people think that's just temporary and we're going to heal. We had a 3.6% unemployment rate before the pandemic without much sign of inflation. There's some probability that we can get back to that, but it's unclear. So the Fed's going to be really watching those data. And as you say, they're not targeting that unemployment rate. They're just watching the inflation data and trying to find a level of the economy that's just cool enough that inflation is back to their target without, as best as they can, without causing a recession and raising that unemployment rate more than is necessary.